Now, if you make a $100,000 salary, you might be extremely excited with what you make, and that's a great amount of money. But what is that actually going to get you in the Greater Toronto area? In today's video, we are going to break down the real numbers for you here on what a $100,000 salary will actually get you when it comes to a mortgage payment. Now, you might be looking to buy a property all by yourself, and congratulations, that's a fantastic feat if you've saved up the down payment and you make a $100,000 salary. But I'm going to show you what the numbers actually look like for you to give you an idea of how prepared you need to be for the type of home this is going to get you. So in today's video, we're going to cover 4 different things. We're going to cover how much home can you actually afford for $100,000 in 2025 using some realistic calculations. I'm going to give you examples of homes that you can actually buy in the GTA for $500,000, $750,000, and $1 million. And I'm going to give you the impact of what that down payment, debt, and interest rate actually looks like on your affordability. And the 4th thing I'm going to cover is some financial strategies so you can stay comfortable and avoid becoming house poor. The last thing we want to do is get you into your first house and all you're worried about is paying that mortgage every single month. You don't want to overextend yourself when you're buying your first house. So let's get into the video. The first thing we need to do here is figure out how much home can you actually afford. Now, the general rule that we're going to follow here is the 28-36 rule. Now, you might be asking yourself, what is this rule? Well, let me break it down for you here. 28% of your gross monthly income should go towards housing. That's the maximum number that you're hoping to go for. And then 36% rule is your total debts, including housing, car, credit cards, loans. This should not exceed 36% of your total gross income. Now, we're working with rough numbers here, retrieved from online calculator. So this is just going to give you a broad idea of what the numbers are actually going to look like here. So let's say you're on a $100,000 salary, gross income that looks like $8,333 a month. Now, let's break down what that number actually looks like. Assuming today's interest rate, we'll say 5% and a 25-year amortization, a $2,333 mortgage payment gets you a maximum home of about $500,000. Now, keep in mind, this is just the mortgage payment. Let's talk about what those other factors might be. Property tax in Toronto, if you're going to spend 500 grand, it's going to be about $15,000 to $2,000 a month on property tax. Divide that by your 12, plus your utilities, plus your gas, plus any loans or payments that you might have. Now, this number here is just a broad number if you had 0 debts whatsoever. We're not talking any car loans, credit card debt. This is if you're scot-free, 0 debts, and a great credit score, potentially with $100,000 and the minimum down payment that would be required, which in this case would be 5%, $25,000, you could potentially get yourself a $500,000 property. Now, for $500,000 in the GTA, what does that actually look like? For the most part, it is a condo, and condos have maintenance fees associated with them. So you'll actually have to look at properties that are quite a bit lower because you need to take into account what that maintenance fee looks like and add that to your mortgage amount. So if you're potentially going to have a $400 a month mortgage payment, and we know we were okay at $2,333, you'll actually need to back off of that $2,300, whatever that maintenance fee is monthly, and that's really what you should be shopping with from a numbers standpoint. So let's talk some down payments and what the roles of those actually are. Your down payment obviously is the biggest factor on whether you can afford a $500,000 home, $1 million home, a $750,000 home. The more you have for a down payment, the more you can actually afford on top of whatever your mortgage approval looks like. So let's say you make $100,000, you have no debts, all that stuff is fantastic. You got the minimum down payment required. You're going to get about $500,000 mortgage, $450,000 mortgage. So anything above and beyond that, you can actually purchase that price point for house. So if you have a $450,000 mortgage and you have 200 grand saved up, you can buy something for about $650,000. So if you can afford a $650,000 home, then at that point you want to look at what the payments actually look like. See if you're confident that once you add your property tax, your utilities, and any additional debts that maybe you do have, whether it's a car loan, something like that, that doesn't exceed that 38% rule. Now, the 28-36% rule It may be a little bit higher in 2025 and maybe in past years because the cost of living, especially in the GTA, has gone up so much more than it has in the past. But use this as a general guideline. You might be okay at 30% and 40%, but use this 28, 36 as a guideline for yourself to make sure you are confident going forward with a purchase, whatever that might look like for you. The first and last thing I always say to my clients is, are you going to be confident and comfortable making the payments when you're getting this property? Because if you're not, maybe it's not time to purchase a home for you right now. You don't want to buy a home just for the sake of buying a home. At the end of the day, it needs to be the right time for you and for whoever else is involved in the transaction. And on top of all this, don't forget, there are closing costs. When you buy a home, there's legal fees, there's land transfer tax, and there's potentially home inspections. This is generally 1.5% to 4% of the general purchase price. So keep all of this in mind. When you are purchasing a home, it's not just cut and dry deposit, mortgage approval, and you're on your way. It's additional things like your property tax, plus the land transfer tax, your legal fees, or even getting the movers to do the move for you. These are all little things that add up over time. So you want to make sure you have all the money and you feel confident going forward with the whole process. Now, when we're talking about what you can actually afford in different price points, we've done different videos on this throughout our channel. If you want to check one of them out right here, it'll show you what you can get in Toronto for $500,000, $750,000, and $1 million. But under $500,000, generally what you're going to get is a 1-bedroom condo. 600 square feet is probably the maximum amount of size that you're actually going to get. And for 500 grand, Scarborough and North York are probably areas you're going to be looking at, or you might have to leave Toronto itself. You can find something under 500 in Brampton potentially, or in Mississauga, because there's a high saturation of condos, especially around the Square One area. So under $500,000, keep in mind, this is kind of the budget you're looking at if you have a minimum down payment of 5% and you are making a $100,000 salary. But let's play the game a little bit here. Let's say you've actually saved up more than that minimum down payment. Let's just discuss what you can get between 500 grand and up to $750,000. So let's say you want to leave Toronto and go more towards that Brampton area. You might actually be able to secure yourself a townhouse, or at least a stacked townhouse, for under $750,000. Now this might be a much better alternative for you. Maybe it's you, your wife, and maybe you have a kid. You're going to want more space than just a 1-bedroom condo. But if you want to be closer to all the action in Toronto, $750,000 is going to generally get you a 2-bedroom condo. What will this look like in terms of actual living space? Between 700 and 850 square feet generally, especially if it's a newer condo. Newer condos are built smaller these days. Your 1-bedrooms are 500 square feet. Your 2-bedrooms generally are around 750 square feet. There are different floor plans, different layouts, but this is a general discussion we're having here about what the space might look like. Now, maybe you have done some top-notch savings, or maybe mom and dad are helping you guys out when it comes to the down payment portion. You might only be approved with your $100,000 salary for about $500,000 mortgage. But maybe you've got $400,000 down payment. That brings you real close to that $900 million price point. And you might want to stay in Toronto, for example. Can you actually secure something in Toronto under $1 million that's a semi-detached? You might be able to, especially if you wanted to stay closer to Humber College, more in that Etobicoke area. You might be able to get an older semi-detached, maybe even an older bungalow under $1 million in that $950 price range. But if you wanted to leave Toronto, you might be able to get yourself a semi-detached or a detached home in Brampton for that $1 million price point. So that might make a lot more sense when it comes to the value. Now, Mississauga, we're seeing townhouses and semi-detached almost the same price there, between that $900,000 and $930,000 price point. So if you want to be in Mississauga, you might be looking at a semi-detached or a townhome, or you might be looking for a detached home only. And if you are looking in a prime area, you're going to be looking potentially at something that's really a fixer-upper and that needs a little bit more work. Whether you're interested in doing that, I'll leave that one up to you. Now, the impact of debt and credit is something that's really a big factor when it comes to getting approval for a mortgage. You might go to the bank or a mortgage broker and they will tell you what you can afford, generally before you start to submit your documentation. But once you submit your documentation, they're going to ask you a lot of questions. They're going to really dive deep into your financial situation. They're going to ask you if you have a car loan, if you have student debt, credit card balances, what they're like. The lenders and whoever's going to give you the money for your mortgage at the end of the day needs to know what they're getting into, and they want to know what your total debt service ratio is. Higher the credit score, well, that's going to potentially give you better rates, which is what you're hoping for. Better rates means thousands of dollars in savings on your monthly mortgage at the end of the day. If you have a low credit score and your debt service ratio isn't perfect, you're potentially going to still be able to get a mortgage, but you're going to have higher payments and a higher rate, and then maybe it just doesn't make a whole lot of sense depending on what your current situation is. And if you're maybe contemplating rent or buy, these numbers are really going to matter when you're putting them all down in front of you to see what does make sense. How much interest you're paying versus the principal that's actually being paid off of your mortgage is an important factor for you to consider. For example, $100,000 salary with no debt whatsoever could potentially get you just right around $475,000 to $500,000 home. Great. If you have $500 a month in debt, this could potentially drop that to $425,000 or $450,000. So a little bit of debt or big payments for a car is going to change your affordability extremely quickly. Make sure you have all your financials in check before you start to go and waste your time looking at Realtor.ca or any of the other websites out there and do that window shopping, because you might find yourself a little bit disappointed at the end of the day. Don't go shopping if you don't know what you can afford. That's what we say. So get your pre-approval first, figure out what you're working with before you go and start to look at everything. Now, budgeting beyond your mortgage. Budgeting is an extremely important thing. You don't want to just have a mortgage payment, it comes out of your account, so does your Netflix subscription, so does your coffee, so does this, so does that. You go to Costco, you spend $300 a month, it all adds up. So there's a few things you actually want to keep in mind here. You want to remember there's utilities on the home as well, generally $200 to $500 a month. Your property taxes, about 1% of your purchase price on an annual basis. You spend $500,000, it's not quite going to be $5,000 property tax, but when you get up to the higher price points, especially out of Toronto where property taxes are a little bit higher, maybe in the Milton area, $1 million home, $10,000 potentially is what your property tax could look like, or maybe a little bit less depending on the city. Now, there's also the maintenance of your house or your condo that you've purchased to consider. Don't expect to move into something and never have to make any repairs, never have to do anything to it. That's just a recipe for disaster. Ultimately, you buy something, have a little bit of a pool saved up where you can easily add a $10, $15, $20 every week to this pot should you have any unforeseen issues. So you actually have money put aside where you can get the roof repaired, the window fixed, whatever the issue might be. Now, there are some strategies that I would suggest to actually stay comfortable when it comes to buying a property. The first one is buy below what you are approved for. If you're approved for $1 million, maybe buy 15 or 10% below that. Focus on $900,000, $850,000 price point, because if the bank is giving you a maximum number, you want to make sure that you're comfortable and you're not going to have to change your lifestyle dramatically if you don't want to. You also want to shop around for rates, especially if you have the great credit, you're in a good financial situation. Don't just take the first rate that's thrown at you by the bank you might use for all your other banking. Talk to mortgage brokers, talk to other mortgage professionals out there, see what the best rates can be offered to you are, so that way your payments can be lower and you keep more money in your pocket. Third way to stay comfortable and potentially save some money is buy a fixer-upper. Sometimes by buying a home that needs to be fixed, you can actually save on the upfront costs, build equity in your house over time, and do these smaller upgrades. And not everybody is willing to get their hands dirty, so this might make sense for you. And the last thing here that's a little bit of a tip for you to stay more comfortable with your home purchase is set up a maintenance fund for yourself, for your family. Automatic savings, they get pulled out of your account every single month. Just put it in a separate account, and this can be used for all of these repairs or home maintenance that is necessary. Remember, at the end of the day, you're not just buying a house and four walls that are surrounding you. You're buying a life, you're buying much more for you and your family. So don't sacrifice all of that for a bigger home that you might not use all of that space. Now in 2025, the reality is the Toronto market doesn't offer you a ton of options if you're making $100,000. But if you have a partner or a significant other who makes additional money, this is going to allow you to have so many more options out there in the market. But if you want to live in Toronto and you make $100,000, you're likely looking for a condo. If you want help finding that condo, you can always reach out to me at the number here on screen. I'd be happy to assist you throughout that process. If you have any questions, you can always comment down below and I will get back to you within 24 hours. If you're not sure where to start, that is the best spot for you to start. Make that connection with me and we can get you started. So there you have it. That is what a $100,000 salary is actually going to look like for you, not only when it comes to your monthly payment, the types of home you might be able to afford in different areas, and ways that you should kind of approach your home buying journey when you make $100,000. If you're serious about getting into the home market and you have any questions, you can always reach out to me. I'll see you in the next video. Thanks so much for watching. Bye for now.